Hey, what's going on, my friends? It's your man, Adam Ace Spencer, and we have another look at our dividend portfolio where we contribute $25 every single week. And as you can see over the past day, we are down 0.61%. And over the past week, we're down 3.20%. Over the past month, we're down 4.72%. But over the past quarter, it went down even more to negative 8.14%. However, over 1 year, we're down 4.53%, and all time, we're down only 2.84%. So things were looking a little scary there at one point, as you can see back in the 1 quarter, down 8.14%. Quite a bit. That was, things were looking a little scary right there, starting to go downhill for the worse. But obviously, things have turned around and kind of leveled out a bit, kind of plateaued. That's what it's looking like. Of course, the market could go down even more, and our portfolio can go down more. But fortunately, we have a lot of strong, stable companies inside of this portfolio. It's a dividend portfolio, so generally, that means it's going to be a company that's going to be less volatile, less susceptible to getting hammered like some of the companies in our growth portfolio, which we'll get that update tomorrow. Yeah, I'm actually satisfied with where this portfolio is at, considering how bad the overall market has been. We're only down 2.84%, which is only $36.58. So not too bad. Our current value, as you guys can see, is $2,014.38. Of that, we have $60.70 that came from dividends, and our market gain is negative $97.28. So if we had not, if we weren't getting hammered from this, this, I don't want to say a market crash. I think it's kind of just been a bearish market. Our portfolio, the total net cash flow would be $2,111.66. But you gotta take the ups and the downs, and it gives us again a total current value of $2,014.38. And when we scroll down here and see who's performing well, of course, or not of course, because I think maybe it was just last week, but prior to that, NEWT wasn't really up here. They were kind of down in the mix, for a bit. They kind of fell out of the mix. And I do have some important news I'm going to share with you guys about NEWT in a bit. So if you do have them in your portfolio, you do want to stick around for this news. And it is something we touched on, a while back, and it is starting now. It's looking more like a reality. So we're going to definitely jump into that news after we finish going through our update. But as you guys can see, NEWT is at the top of our list, currently up 26.27%, killing it. Coca-Cola up 18.37%, followed by Pepsi up 14.41%, Procter & Gamble up 10%, Johnson & Johnson up 9.96%, and then Realty Income, our second REIT, which is up 7.40%. And then we have Verizon, which is just basically even, but negative 0.05%, JP Morgan Chase, negative 22.68%, and Innovative Industrial Properties, negative 22.91%. And at the bottom of our list is 3M, which is crazy that they're getting hammered the way they have, but 3M at the bottom of our list at 33.13%. And, I do think when I was looking at their kind of company quarterly report and whatnot, I think a lot of it's just them saying, hey, we're going to be doubling down on their spending and whatnot. And it's going to be more of, basically, it's kind of assuring that it is a good move for the long term. If you're looking at them as a short-term opportunity, it might not be the best time. Although they are down quite a bit, it's like, there's probably going to be some upside from here, even if it is like not much from the short term perspective. So that would still be something to consider buying for your portfolio if you wanted to add them short term or long term. Definitely long term, we're keeping them in here, not even thinking about removing them or anyone else at this moment in time. However, we may want to consider potentially getting NEWT out of the mix. And I know it's hard for me to say that because they've performed pretty well for us here in the overall market. If we look at our earned dividends, you're going to see NEWT at the top of the list, killing it compared to everyone else here at $15.28. Then you have Verizon at $6.54, followed by our second REIT, Realty Income Corp, at $6.32%, and then 3M at $5.27%, and so on and so on. So, for one, 3M is fairly high up here. So although they weren't performing the best with their stock, the actual stock price, they are someone who's obviously paying out fairly well with the dividends. And if we had a lot more money in here, this would certainly be much larger, and you'd probably be able to appreciate it more. But either way, we're heading in the right direction. But man, this is going to be tricky because our top dog, NEWTEK, which is a REIT, yeah, there's some news that isn't necessarily the best. Now, we actually covered this. I covered this months ago when things were like really picking up around this topic, this potential news, which, as you can see, investors don't want you to become a bank. And basically, they're referring to NEWT, who might be making this transition, it seems like. I'm going to read this article. It says, NEWTEK Business Services, a business development company and a prolific small business administration lender, is trying to buy a bank. Its investors aren't thrilled with the plan. As a business development company, NEWTEK is required to pay out at least 90% of earnings as dividends. So this might explain why they are paying so high compared to everyone else when you see the payout of dividends inside of our dividend portfolio. It says, investors fear that income stream will be diminished after the company converts to the bank holding company structure, so much so that a significant number have already sold off the stock. Between July 20th and January 12th, investors holding 6.3 million shares sold down to zero, according to NEWTEK. Now, if you guys remember, as I was saying, there was a period where they kind of fell off. NEWTEK was killing it for a while, and then they kind of disappeared, fell off. Pepsi and Coke and others moved up to the top of our list for, past few weeks. You can look back, and now they're just getting back into the mix, which is interesting because the timing. But as a bank, NEWTEK may be able to develop deeper relationships with clients, access cheaper funding, and ultimately produce more value for investors, according to Barry Slona, the Boca Raton, Florida company's chairman, president, and CEO. To this end, NEWTEK applied last week with the Office of the Comptroller of the Currency to acquire the $200 million asset National Bank of New York City. So the timing for them to all of a sudden pop off, if we look at our list, you see NEWTEK is at the top again. Go back and look over the past for a while. They kind of disappeared, weren't at the top, and they're back. So it's interesting. I wonder if there might be some news that, hey, maybe, this doesn't mention anything of the sort, but maybe there's some news that indicates they will not be reducing their dividends. Or maybe it's not as significant as some people kind of assumed it may have been. I don't know. I don't really know what exactly is the newfound hype as to why people jumped back on the bandwagon. And if that's even, what I can accurately say. Let's jump in here and look and see. When we look at the performance here. Yeah, I mean, this is like crazy. So I guess by being way back up, it's not even that. It didn't even fall that much compared to what I was thinking. It felt like it fell down even more, but I guess the fall down that probably, they're really referring to the most was back at in December. And obviously when that potential news came out that they might be acquiring a bank, I think this is that crazy fall that you see here where people weren't too happy about it. We've been consistent in the same area, I guess. That's not too bad, actually. But either way, we need to get some information about what they are going to be doing with the dividends when it comes to NEWTEK. As we can see over here, market gain $13.53, and as we know, our earned dividends is $15.28. So things are going well with them right now, and our portfolio as a whole, I'm satisfied. If you guys want to, get your money to start to grow for you, you can start your own dividend portfolio or growth portfolio or mix it up here inside of M1 Finance using my link down below in the description area. If you do use my link and if you fund your account with at least $100, they will give you $20 or $30 for free that you could then add to your portfolio and get that money working for you as well. And I know some of you might be like, man, I don't know, you're down 2.84%. If this was in a savings account, I'd get 0.01%. True. But let's have this conversation in another year or two, and we'll see how your savings account is looking compared to our dividend portfolio. But all right, my friends, you already know what it is. I got to keep it moving. Feel free to leave a comment down below with your thoughts about NEWTEK, if we should get rid of them, if we want to just hold them tight. And, if you have any suggestions as to who we might potentially replace them with if we do decide to get rid of them. Otherwise, smash that like button, hit the subscribe button if you haven't already, if you're new here, and of course, hit that notification bell so that way you can be up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. If you are looking for other ways to grow your money, make sure, pointing in the wrong way. There we go. Make sure, or maybe we want to just go down. I think we're going to go down. Just check out that video over here or one of those. I got to get better with this direction thing. All right, my friends, I got to keep it moving. Much appreciation for watching, but I'll see you guys in the next video. Peace.